60. Well, Vikash Kumar Jain of CLSA is now joining us. CLSA India's investor conference kicks off next week. It runs from the coming Monday to Wednesday. Vikash, good to have you on the program before that. So it's an interesting time to hold the conference. If you'd done the conference at the beginning of the year, the mood would have been completely different. And the mood, I reckon, perhaps will be a little different. The questions will be very different as well. Just as a market view at the conference, Vikash, what kind of questions are you anticipating? What's the kind of feedback, and what's your view really as far as how we're doing?
I would beg to differ. I think it's going to be a very interesting time to have the conference, because just our Asia conference in September, the popular complaint was, yes, valuations are quite extended, and that's really what the popular complaint was. And in the last 7 weeks, soon after that conference, in fact, because that was in September, we made a top and then we've fallen 10% as we stand today. So the valuation worry is much lesser. And while we were seeing pretty big inflows in the month of September, October was a complete washout, and it's just not stopped in November. So I think the mood in terms of flows is different. But for the other side of the argument in terms of valuation is less demanding now than what it was in many cases. It was tough to find pockets of okay valuations. Now we can find some of them. So definitely that part of the conversation will be the most interesting one that I'm really looking forward to in terms of discussing. So that's time when we can discuss some bottom-up ideas as well.
No, I want to beg to differ, because I said it's an interesting time, just in a different way. Yeah, it's a differently interesting way. Time to hold the conference. Before at the beginning of the show, Vikash, and I know you do this analysis every month, what local mutual funds have, I think, bought and cash levels, etc. I mean, you would have a real-time sense. What is the cash level with domestic funds? One worry we've heard from many, and this is not just now, actually, back in late September as well, that with with so much of FII selling plus primary markets being so hot, local funds to match up and to sort of soak up all of that perhaps is running low. Could you give us a sense of where we are at on that count, industry-wide?
See, I think, yes, clearly that has got depleted for sure with both primary market activity as well as what FIIs have been doing in terms of selling. But what we need to also appreciate is, see, this is the part which is easily available. What we need to also look at is how foreigners might be after this kind of selling. See, there was a significant proportion of funds who were not overweight India at the end of September. A lot of them, that number would have also swollen. Now, there are reasons why we saw the selling. Those reasons, in a way, incidentally, we had put out in a report early October where we said, IPO frenzy at the time when China was awakening. So we had kind of got worried about those reasons around just at the start of this decline itself. Some of those reasons are getting addressed in itself. For example, I think maybe one or two issues left, but we are getting towards the fag end of this, the bigger spurt that we saw in IPOs and the overall excitement being relatively low. A lot of, newer issues maybe not that quickly to come. So that one pressure is lesser. With whatever's happened in the US, the China part of excitement has automatically reduced into a period of uncertainty, at least, till we see when Trump, after the inauguration, what he has to say. So some of those reasons which led to the initial part of the October correction are now, and we were staring at a weak set of earnings. We're coming to a close of that earnings. So the market has fallen 10%. But if you imagine what all it has digested in this 10% fall, I would say 10% isn't that bad an outcome. Yes, and sentiment, by the way, our proprietary India bull bear sentiment was at an extreme bullish point at the end of September, which was the other reason why we started getting worried on the market. That is now, although I've not checked the more recent numbers this week, but it is more clear, more towards the bearish point, although it was not at the extreme bearish point yet.
Yes.
So that's the other part. So sentiment has got addressed. The China competition looks lesser now in terms of flows. We've digested the earnings decline that we saw during the results. So I would say to some of those extent, a lot of that has been digested by the market with much less damage than what if I would have told you that the FIs are going to sell $14 billion in the next 7 weeks. Most likely, you would have given a much worse outcome than what we are at today.
Yeah. Vikash, hi, great to have you on, and a good day actually to be having this conversation, as good as any. So I'll tell you what, over the last 6-7 weeks since we've been in this fall, we heard three major reasons why FPIs could be selling India. One, as you mentioned, was this whole excitement around China, and that you explained it's kind of fizzling out now with Trump taking the White House, and we'll see what happens. The second reason that we've been hearing is money going back to the US market. The home market is looking great, and look at what's happening to the dollar, and Trump is going to make America great again and all of that. So the US market is the best to invest, so therefore pull money out of a market like India. And the third reason we've been hearing is India's going through an earnings slowdown. Address reason number 2 and reason number 3 and tell us if you think they're valid.
No, so see, all of them are valid. Reason 3 is a bit self-inflicted. Because if you see government discretionary expenditure in the first half has been very low. It's down some, I think, 7-8% if I remember correctly. For them to reach the target that they have set in the budget, they basically need to spend at a 14% YOY growth in the second half. So I think that reason partly is self-inflicted, partly also, RBI has been much more focused on inflation. So there are ammunitions for the government to do certain bits to improve that part, which is the third reason. Some of it from the government side at least can be addressed. The second reason I would say is a relatively more like a last 2-3 week outcome, more as chances of Trump winning increased and finally the news flow hit. So then with the dollar rallying the way it is going to be tough for EMs to get flows or inflows. And most likely EMs are seeing outflows, EM funds are seeing outflows. And then there is a tendency for fund managers to sell where they're sitting on profits. That is what is impacting India. That's the one part which I would say the surprise of that is also getting digested now. We are going to be in a bit of a 2-month period where we will not hear anything concrete from a president who has historically been very difficult to predict. Yes, there has been a rhetoric going into the election, but what exactly will be his policy-making style this time on is, still not something that we can be so sure of. So I think we could get into a 1.5-2 month period where perhaps some of these incremental negatives get settled down to an extent. And there's a little bit of a calm from a macro news flow perspective, which isn't going to be that bad for the markets, in my opinion.
All right. Hi, Vikas, and good to see you in, and all the best for the conference. Just look at a note that came in around 90 minutes or so ago from DAM Capital, and they're saying that the mutual fund industry is sitting on liquidity of 5.6%, which equates to around 1.7 lakh crores. So it's come down from the previous month, but still pretty healthy. So we'll have to see their plan with regard to deployment. Vikas, I recall a couple of months ago when we chatted, and you said that you're moved out of select infra capex heavy themes, more into IT. As of now, what is your top theme that you're looking at? Oil prices have cooled off a little bit. The problem is there's a slowdown on the domestic front as well. So the top theme that you'll have.
Sure. So, I think sadly, I did run with that IT overweight for 6 months, ran it pretty well. But sometime about a month ago, we went back underweight. And I obviously underestimated the Trump impact. And that's kind of, if you think about it, whatever's happened post the president coming in, it looks like it's good for tech, it's good for dollar. That's the way to play that becomes the tech side of things. But my sense is that there is an initial kind of an excitement to this trade, and then there's going to be cool off. So that's why I would believe that some of that IT excitement will fizzle out, and that's a sector which we've started liking less in the last month or so. The areas that we are, if we think about all of this, the uncertainty that the president brings in might make us delay the rate cuts. And that's where I think if the domestic side is addressed, then some of the banks might start looking much better than others. And they are one area which are not that extended in valuations at this point of time. And where the growth part of the premium is much lesser. since you're worried about growth in India, I think anyways the premium on growth was much lesser on many of those stocks. So that's one area which looks like a good place. Plus, towards the last 6-8 weeks, there's anyways a tendency for laggards to do very well last 6-8 weeks of the calendar year. I think that's where banks fit very well. The call that we took on, instead of IT, we went overweight commodities, was a bit to do with China. Now that is where things have to be seen from a slightly longer term perspective. And this is the answer of that in terms of what happens clearly in terms of Chinese policy making and the US policy making impacting China is something that we will only come to know in February or so. So there is a little bit of a period of a lull over there, because only when the first few weeks of Trump policy making is visible do we realize if it's a deal making kind of a Trump that we are seeing, who's using the threats of tariff to make a better deal, or it's really going to be that extreme tariffs that we talk about. So that's the bit that we do not know for sure, and that's something which is very difficult to predict. But that's, I think, what is going to be the defining theme of next year, because that will have a follow-on impact on India as well in terms of flows, the way that kind of comes in.
Because running out of time, so just a quick one. Reliance, you've kind of come out with this big report, and you're saying it's a great price to buy. You're saying buy right, sit tight. I think that if I got that title correct. So in 45 seconds, 60 seconds, summarize that thesis for us on Reliance. And there are always going to be, whatever the view is, overall market, etc., there are always going to be, from your coverage universe, stocks which have fallen enough and are looking attractive fundamentally, if one is willing to wait. So what are the other, say, 3-4 names, if you can outline for our viewers? Published stuff. Yeah.
So Prashant, we can't be stock specific, but I'll just tell you that is one report that you spoke about, but we have a bigger report where we are discussing the solar space and that as an opportunity. And that's the report which we have kind of come out with, and that is on that same conglomerate, but and their solar foray. In terms of names, see, we have a India-focused portfolio which has a reasonably good track record, and I think we have about 11 or so large and liquid names because it's a large cap portfolio. That's something where we, like I said, we are overweight banks, we are overweight commodities selectively, we are also overweight, insurance. So those are the sectors that we like in general.
Okay. All right. We'll leave it there, Vikash. Thank you very much for joining us here on CNBC-TV18. Good luck with the conference next week, and hope to speak with you maybe post the conference. You'll have much more in terms of insights and feedback from investors who are going to be here to attend that. Thank you very much. We'll take a quick commercial break here. We're going to come back, do a quick check in terms of what's happening with dealing rooms. Nimesh is going to be joining us for that. And after that, we'll get you some short-term trading ideas with the technical experts. Stay tuned.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.